Hello and welcome back to DukascopTv. Today I'm joined in the studio by Scott Arnell from Geneva Capital, Alternate Investment Advisors for Frontier and Emerging Markets. Scott, thank you so much for coming in today. There has been quite a lot of interest in emerging markets in previous years, but now it seems that frontier markets are coming to the fore. Can you discuss the difference between the two for a bit, please?
Yeah, sure. Emerging markets, first of all, is a broad category and a term that refers to countries whose economies are in the process of rapid growth and industrialization. The BRICS, for example. Now, frontier markets is a subset of the broader category, emerging markets that I just spoke about, and these are countries with economies whose market capitalizations and liquidity it's much lower than the more developed countries like the BRICS. There's no definitive list of what's included in emerging markets, but it can include up to 40 countries. Many people are making the case for frontier market investing, such as Jim O'Neill of Goldman Sachs, who actually is the person who coined the acronym BRIC some time back. And his team recently released a report where they expressed the opinion that the heyday of the BRICS may well be behind us, and that investing in these other emerging markets may provide more interesting investment opportunities than investing in other places like China, for example.
Okay, well, you mentioned China there. Now, there has been some concern that things are slowing down in China. Would you still say it's a safe investment ahead of perhaps the USA or the Eurozone? What do you think about it?
What? China slowing down to what? 8%? 7.5%, 7%. Oh my God. And let's see, the United States and Europe forecast next year for, wait for it, 2%. Honestly, I don't get it when people, keep banging away at this slowdown in China, because I think the U.S. and Europe are going to be in the penalty box for some time forward. But the easy money in China has been made, okay? And anybody going in there looking to do quick flips in, counting on ever increasing PE valuations, they're going to get their clock cleaned. But if you're an investor that has local on the ground knowledge, and you have the ability to contribute with value add to your investments via, let's say, your Chinese network in country or your government relationships. These type of investors are going to be able to realize very nice multiple double-digit returns for some time in the future, because the underlying demand is being fueled by an exploding middle class, as well as China's transition in China's economic model from a manufacturing for export model to an internal growth model. Now, I'm not saying that there aren't problems, and I'm not saying that there aren't areas to avoid. What I am saying is that the underlying demand is still there, and it's going to continue to be there for some time forward.
Now, perhaps China's slowing down to a frenzy or something, that's what we can say about it. But you've obviously travelled to Asia, you've been there. What is the feeling on the ground over there about the euro crisis, for example?
Oh, the endless euro crisis, you mean? Well, most of the people that I talk to there, I think that the feeling that I get is that they feel that Europe needs to have a plan B, and a plan B that provides for a transition to post-euro currencies that'll allow some of these long-delayed restructuring reforms to get underway.
So you don't think that the possible ECB pronunciations are positive? What do you think of the outlook of that?
Possible?
Possible or adequate, what shall we say?
Possible, I suppose anything's possible. I guess it's possible that Martians will land a spaceship in front of the ECB, jump out, purchase all of the junk sovereign euro debt, declare the euro crisis over, and I guess that's possible, but I don't think it's very likely.
Perhaps not. What do you think maybe is a more likely situation?
It's going to take structural reform, and maybe some of these people are going to have to exit, or maybe Germany has to exit. I don't know. I mean, frankly, I'm not here today saying that I'm an expert. I just see that throwing some bond buying capability by the ECB at the euro crisis isn't going to work. you need more than hundreds of billions of euros. We're talking about, euro trillions in order to really make an impact. And when we all know underlying it is structural reform and fiscal union. That's what's lacking.
Okay. Now, you mentioned earlier on the Geneva Roadshow, the TV channel. Can you tell me a little bit about that, please?
Yeah, GenevaRoadshow.tv is a web channel that we launched, and it takes a not-so-boring look at the investment world. And essentially, we take a camera into the offices of different investment fund managers and people that I run into on my travels who I think are interesting or bring a certain perspective that may be of interest to investors, professional investors who don't maybe get the chance to see some of the things that I see.
Now, it does seem to have a bit of an out there sort of notion against our backdrop behind it. It's got heavy metal music, it's quite punchy. What is the target audience, or what are you trying to achieve by that?
Yeah, you're right. We're targeting a young, tech-savvy audience, maybe raised in the YouTube world. It's all very experimental. We do it on a shoestring budget. But the guy we got to do it, he works for nothing. He's quite funny, and he's a pretty good-looking guy.
If you do say so yourself. Okay. Well, thank you very much for your time, Scott, today. It's been a pleasure speaking to you. Very interesting. Now, that's all we've got time for at DukascopTv. Please tune in for more interviews and press reviews from all the TV team. But for now, goodbye.